Good morning, everyone. It's Marshall Giller bringing you the morning comment for March 5th. The notable feature of the market yesterday was the euro's weakness ahead of the ECB meeting today. This suggests to me that the FX market hasn't yet factored in the full impact of quantitative easing. The euro could weaken further today as the ECB is likely to reiterate its pledge to keep quantitative easing in place until it's proven successful in raising inflation back to target. Moreover, there's also the question of whom they're going to buy the bonds from. Probably foreigners who will then repatriate their money. Meanwhile, I look forward to hearing ECB President Draghi answer a lot of my questions about the program, such as what they'll do if they can't find enough paper to buy. Also, we eagerly await the updated economic forecast, including the first forecast for 2017. Do they see inflation getting back to target by then? Stay tuned to find out. The Bank of Canada kept interest rates on hold yesterday, as expected, but the tone of this statement was less dovish than anticipated. Dollar CAD collapsed at the release, but it's still trading within a triangle formation and above the key support barrier of 123.70. A strong non-farm payrolls print on Friday is likely to erase Wednesday's losses and could even drive the pair back up again over 125, the figure, in my humble opinion. WTI rose yesterday for the third consecutive day on news of a smaller than expected rise in U.S. inventories. The slowdown indicates that U.S. supply is starting to respond to lower oil prices. In contrast, Brent fell slightly as Saudi Arabia reiterated its pledge not to cut production. Given the difference in the response between profit-driven U.S. producers and less profit-sensitive Middle Eastern producers, we could see the gap between WTI and Brent narrow further. Now, aside from the ECB, the Bank of England also meets today to decide on its policy rate. There's just about no chance of a change, so the impact on the market should be minimal, as usual. The minutes of the meeting, however, should make interesting reading when they're released on the 18th of March. As for today's indicators, in Sweden, industrial production for January is expected to have slowed from the previous month. This could weaken the Swedish krona and drive dollar-SEK up for a test of the 8.4, the figure resistance zone. From the U.S., factory orders for January are expected to have risen 0.2% month-on-month, a turnaround from a fall in the previous month. After 5 consecutive months of drops, even a modest rise in factory orders could be an indication that U.S. growth has started regaining momentum in the first quarter after cooling a bit in the fourth quarter, and consequently support the dollar. Canada's IB PMI for February is forecast to have risen, but still to stay below the 50 critical level. And besides ECB President Draghi, we have speeches from the Riksbank and Nordbank governors. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.